10 Personal Finance Rules to Achieve Financial Security. Welcome to today's video, where we'll be diving into 10 essential personal finance rules that can help you achieve financial security. If you're a young professional who's just starting to navigate the world of money, budgeting, investing, and managing debt, this video is tailor-made for you. These rules are easy to follow, actionable, and designed to help you take control of your financial future. So, let's get started. The first step in achieving financial security is to set clear and meaningful goals. Without goals, your financial journey lacks direction. Take a moment to break your objectives into 3 categories. Short-term goals. These may include saving for a vacation, building an emergency fund, or paying off a small chunk of debt. Medium-term goals. These could involve buying a car, funding additional education, or saving for a down payment on a home. Long-term goals. This might be retiring early, achieving financial freedom, or leaving a legacy for your family. Having clear goals gives your finances purpose, keeps you motivated, and provides a roadmap to measure your progress. A budget is your blueprint for financial success. Many of us think of budgeting as restrictive, but it actually gives you control over your money. A good starting point is the 50-30-20 rule. Allocate 50% of your income to essentials such as rent, utilities, and groceries. Use 30% for discretionary spending, things you enjoy but don't necessarily need, like dining out or entertainment. Save the remaining 20%. There are plenty of budgeting tools and apps that can help you monitor your spending, so you always know where your money goes. The key here is consistency. Stick to your budget, and over time, it will become second nature. Here's a game changer. Always pay yourself first. What does this mean? As soon as your paycheck hits your account, prioritize saving a portion of it before spending on anything else. This ensures that saving becomes a non-negotiable habit rather than an afterthought. A recommended starting point is to save at least 20% of your income, but if that seems challenging, begin with a smaller percentage and grow it over time. Better yet, automate your savings. It's effortless and keeps you disciplined. Life is unpredictable. An emergency fund acts as your financial safety net for unexpected expenses like medical bills, car repairs, or even sudden job losses. Without one, you may resort to credit cards or loans, which can quickly spiral into more debt. A good rule of thumb is to save 3-6 months' worth of living expenses in an easily accessible account. Start small. Even saving $500 to $1,000 initially can save you from financial stress during emergencies. Debt can weigh heavily on your finances, especially high-interest debt like credit cards. If you carry balances on multiple debts, use repayment strategies like the debt avalanche method. Prioritize paying off the debt with the highest interest rate while making minimum payments on others. The debt snowball method. Start with the smallest balance first for quick wins and motivation, then move on to the next. Clearing high-interest debt not only reduces financial burden, but also frees up more of your income for other goals, like saving or investing. Here's a rule most people regret learning too late. Start investing as early as possible. Why? Compound interest. The earlier you start, the more time your money has to grow. For instance, if you invest $100 a month starting at age 25, you could end up with significantly more by retirement compared to starting the same investment at age 35. It's not about how much you invest, but how long your money has to grow. Start with beginner-friendly options like index funds, ETFs, or retirement accounts like a Roth IRA or 401k. Remember, waiting for the perfect time to invest may cost you more than starting small today. In a world full of advertisements, it's easy to fall into the trap of impulsive spending. To achieve financial security, focus on spending intentionally. Differentiate needs from wants. Ask yourself, is this something I need to survive, or is it a want dictated by short-term desires? Before making significant purchases, adopt the 24-hour rule. Wait a day to decide if the purchase is truly necessary. Intentional spending saves money and ensures your financial decisions align with your goals. Lifestyle inflation happens when your expenses increase as your income rises. While it's tempting to upgrade your lifestyle with every promotion or raise, this habit can keep you trapped in a cycle of living paycheck to paycheck, even with a higher salary. To combat this, maintain a comfortable but modest lifestyle as your income grows. Allocate extra income toward investments, savings, or paying off debt. Remember, financial security doesn't come from what you earn, but from what you keep. If your employer offers benefits like a 401k retirement plan, health savings accounts, HSAs, or tuition reimbursement programs, make sure to maximize these perks. Employer matching. Many companies match a portion of your 401k contributions. Not contributing enough to receive the full match is like leaving free money on the table. Health benefits. HSAs and FSAs can help you save for medical expenses while reducing your taxable income. Workplace benefits can significantly accelerate your path to financial security. Financial security isn't just about growing your wealth, it's about protecting it too. Make sure you have the right insurance policies in place, such as health insurance to cover medical emergencies, life insurance to provide for your family in case the unexpected happens, disability insurance in case illness or injury affects your ability to earn income. Additionally, don't forget to continually develop your skills and education as a way to protect against career stagnation. A growing income can shield you from financial risks over time. 10 personal finance rules to achieve financial security. Beyond these rules, financial security is a journey that benefits from continuous learning and self-improvement. Monitor your progress regularly. Revisit your goals every few months and adapt to life changes. As your income grows, adjust your budget and savings contributions. Understand your credit score. A healthy credit score is crucial for big financial decisions like buying a home or securing a loan. Pay your bills on time and reduce credit card balances to improve it. Keep upskilling. Invest in yourself by attending workshops, earning certifications, or joining mentorship programs to boost your earning potential. Educate yourself continuously. Read books, listen to podcasts, and use resources to improve your financial knowledge. Financial security doesn't happen overnight. It's the result of consistent efforts over time. Instead of feeling overwhelmed by these 10 rules, start small. Set one financial goal today, whether it's starting a budget, saving $50, or paying off $100 toward debt. Write this goal in the comments and share your progress. The important part is taking that first step. As you build habits like budgeting, saving, and investing, you'll find that achieving financial security is closer than you think. Remember, financial security gives you freedom, the freedom to make choices, pursue passions, and live life on your terms. With these 10 rules, you now have the foundation for a bright, prosperous future. Thank you for watching. Don't forget to like, subscribe, and check out the next video, where we'll talk about smart investments for beginners. Your financial journey starts today. Take control and thrive.